Ladies and gentlemen, good day and welcome to the Q4 and FY26 conference call hosted by Premier Explosives Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akhilesh Gandhi from Stellar IR. Thank you, and over to you, Mr. Gandhi.
Thank you, Avirat. Good morning, everyone, and thank you for joining on Saturday morning. I, Akhilesh Gandhi, on behalf of Stellar Investor Relations, welcome you all to the PREMEXPLN Q4 and FY26 earnings conference call. We shall be sharing the key operating and the financial highlights for the fourth quarter and the full year ended on March 31st, 2026. Today we have with us the senior management team of Premier Explosives, mainly Mr. T.V. Chaudhary, sir. He's a managing director. Along with that, we also have Mr. Vijayji Kumar. He's a chief financial officer. But before we begin, I would like to state that this call may contain some of the forward-looking statements which are completely based upon the company's beliefs, opinions, and expectations as of today. These statements made in today's call are not a guarantee of future performance and also involve unforeseen risks and uncertainties. The company also undertakes no obligation to update any forward-looking statements to reflect development that occur after the statement is made. Document relating to the company's financial performance, including the investor presentation, is already been uploaded on the stock exchanges. With that, I now invite Mr. T.V. Chaudhary, sir, to share his initial remarks on the company's performance for the fourth quarter and the full year ended on March 31st, 2026. Thank you, and over to you, sir.
Thank you, Mr. Gandhi, and good morning to everyone. I welcome you to the earnings conference call of Premier Explosives for the fourth quarter and full year ended 31st March 2026. Thank you for joining us. I trust you have reviewed our Q4 and FY26 results along with the investor presentation available on the stock exchanges. During Q4 FY26, we delivered a healthy revenue performance driven primarily by strong momentum in our defense and space segment. The segment contributed 76% of the overall revenue at rupees 67.7 crores and registered an impressive growth of 43% year-on-year. For FY26, revenue performance was impacted due to the execution of a larger volume of high-value shafts and flares orders in financial year 25, with execution timing affecting the overall performance during the year. Additionally, operating profitability for both the quarter and the full year was impacted by elevated raw material prices amid prevailing global tensions, a challenge that was experienced across the industry. Highest ever order book stands at rupees 1,569 crores, representing 4.04 times of FY26 revenue and providing strong medium-term visibility. During the quarter, consistent execution strengthened our positioning and enabled us to secure larger and strategically significant contracts from the Ministry of Defense, domestic defense players, and international customers. In April, we secured a major export order worth rupees 350.23 crores from international clients for the supply of defense products. Additionally, we continue to witness healthy order momentum across key product categories, including shafts and flares, rocket motors, and other defense systems, further strengthening our order pipeline. We are currently in discussions with the Andhra Pradesh government for acquisition of a 400-acre land parcel to establish a dedicated defense manufacturing facility. In parallel, the company is also actively developing new products which are expected to generate a healthy order inflow in the coming quarters. Premier continues to occupy a unique strategic position as the only Indian company qualified to manufacture countermeasures and as a key exporter of fully assembled rocket motors. Our diversified portfolio across warheads, mines, and ammunition further reinforces our contribution towards India's defense indigenization objectives. With sustained policy support for domestic defense manufacturing and import substitution, we believe the long-term structural growth outlook for the sector remains highly promising. Going forward, our focus remains firmly on driving execution excellence, strengthening technological capabilities, scaling capacities, in a calibrated manner and further expanding our global presence. We remain confident in our growth trajectory and committed to delivering sustainable value for all stakeholders. Now I request Mr. Vijay Kumar, our CFO, to share the financial performance.
Thank you, sir. Good morning, everyone. And the result presentation for the quarter ended March 31st, 2026 has been uploaded on the stock exchanges. I believe you may have gone through the same. The revenue from operations for Q4 FY26 grew by 20% year-on-year to 89.2 crores. Our EBIT for Q4 FY26 grew by 35% year-on-year to 9.6 crores. The EBIT margin for the quarter stands at 10.8%. Our net profit increased by 78% year-on-year to 6.6 crores. The PAT margin for the quarter stands at 7.4%. The revenue from operations for FY26 degrew by 7% to 388.3 crores. Our EBIT for FY26 grew by 42% year-on-year to 69.3 crores. The EBIT margin for FY26 stands at 17.8%. Our net profit increased by 61% year-on-year to 45.8 crores. The PAT margin for the quarter stands at 11.8%. Now coming to the order book. The company's current order book stands at 1569 crores, out of which defense segment order is majority of 1491 crores, which is equal to 95% of the total order book. Explosive segment stands at 31 crores, which is equal to 2% of the total order book, and service segment, which is operational and maintenance service segment, stands at 47 crores, which is equal to 3% of the total order book. So this represents our highest level order book and reflects the strong growth visibility we see over the coming years. We remain confident that, supported by sustained execution momentum, continued development of new products, and our ongoing expansion initiatives, the company will continue to maintain a strong growth trajectory in the forthcoming quarters. With this, we will now open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Dipen Vakil from Phillip Capital. Please go ahead.
Thank you for the opportunity, sir, and congratulations on a great quarter. So my first question is, you mentioned that you had some, FY25 was a year boosted because of shafts and flares, and FY26 was largely, the performance was muted because of that. So for FY27, how do you look at the outlook to be as to what kind of growth and margins are we targeting, considering that now those emergency procurement orders would be limited?
FY27, we are expecting a growth which is commensurate to previous years because the new areas, that is landmines and payloads for drones and loitering munitions and medium caliber ammunition, which are going slow because of the non-availability of raw material. Now alternate raw material is found, and then our designers have accepted that. So we are hoping that the current year these are areas which are going to contribute to our turnover and profitability.
So any quantum to that?
These orders are already there included in the order book, what is mentioned in the above.
I meant to ask on the revenue growth for FY27.
Yeah, it is. We are targeting 600 to 700 crores.
Got it, sir. And margins?
Margins, it will be similar, between 15 to 20%.
Got it, sir. So you also mentioned about the raw material availability impacting explosive segment. So right now, how is the execution paced especially with respect to our domestic PSUs in terms of the deliveries and the kind of availability from them? So is the execution on track, or there's a slowdown on that front as well?
No, it has. We had slowdown on the shafts and flares earlier, but now we are happy to inform you that we have executed the order, last year's order completed, and we have started producing against the new order. In the meantime, I would like to share with you that the flares production plant where there was an accident 1.5 years back, that plant is recommissioned and it is producing. So our dependence on the imports also is reduced, and then we are hoping that this all is going to contribute well for the current financial year.
Got it, sir. Got it. So right now with QRSAM order also coming, expected to finalize soon, are you expecting any order inflow from QRSAM as well?
We are ready to take the order, but the status and all those, we are not very sure, very clear when the order will come and when that. So this, our estimates are not, the QRSAM is not included in this.
Got it, sir. That's thank you so much for answering my question, sir, and all the best for FY27. I'll fall back on the queue.
Thank you.
Thank you. The next question is from the line of Varun Jain from Dolat Capital. Please go ahead.
Yeah, hi. Good morning, sir. So I have a couple of questions. So the first question is, sir, on the guidance front, I think in Feb 26 call, you said that, we'll try to get to 500 CR, but we've come in at much lesser, like close to 390. So, sir, has anything changed from Feb 2 till now, like Q4 was not as well as it was expected?
Yeah, like I mentioned earlier, the multiple factors have affected this. One of them, I said, is the availability of raw material for execution of these mines and loitering munitions, and also flares, where we were dependent on the some of the inputs, raw materials on MIL Munitions India Limited, but they have informed their inability to meet the requirements. So we had to again take up the matter with DRDO, who are the technology providers, with an alternate raw material against that. And it took time for acceptance. In fact, the trials are still going on with the alternate raw material. We are hoping that in a month or two we will be completing that, and then we will be in production with the permission from DRDO.
Sure, sir. And sir, on the capex front, I think you have done close to 28 CR of capex in FY26, and the total capex for 26 and 27 was 45 crores was required for Kattepalli expansion and 15 CR for PDK. That is my understanding. So now you're saying PDK 15 CR is done, so that would imply that close to 25 CR for Kattepalli is still pending. Is that understanding correct? And when is that expected to complete?
So the PDK, what figure you have mentioned, that is not including the execution. We have already completed the flare production plant, which is productionized in the last financial year, that is FY25 itself. The balance amount, what is there, the other new mixers and new storage facilities, magazines, and all those construction which is going on.
And for Kattepalli?
Kattepalli, the plant is, that we have taken up expansion of RDX and HMX plant. The expansion project is going on. It is not yet completed. Similarly, the other areas, this large planetary mixer and the supporting balancing equipment and supporting equipment and magazines is still going on work. We are hoping that by the end of first quarter itself, some of them will be capitalized.
So, sir, this Kattepalli entire expansion is expected to end by Q2, like Q2 FY27 it will end?
It may go up to Q3 because, see, we are in the business of explosives where the qualification of the plant and qualification of the product produced from the plant is important. That will take another 1 or 2 months once we complete the execution, erection and commissioning of the plant.
Okay. And sir, I saw that there was a 18.9 CR order which was received in Feb and it got cancelled in April because there was a export license which was not given. So I saw that recently company won a 350 CR order of defense products to an international client. So does this risk of export license not being given exist for such orders like this big order and other orders?
Yeah, this is, under Arms Act and all this is export license is very important. And in this business, yes, there is a possibility of export license getting rejected also, because this depends on the government policy. Based on the policy, whether permission is given or not given will be decided by government.
Depending on the country also.
Yeah, and
we were exporting.
Okay, sir. Okay. And sir, just last two questions from my end. So, sir, we had won this 430 CR order in October of 2025. So, out of this 430 CR order, how much has been completed in FY26 and how much will be completed in FY27?
It has just started the execution because we have completed the order prior to that, which is an emergency procurement order. That part we have completed and then started the next order working on that.
So, sir, this out of this 430 CR, how much revenue do we expect to see in FY27?
That it will be, I think, 2/3 will be done before the end of financial year 27. 1/3 may still flow to next year.
Okay. And sir, the July 23 shafts and flares order, has it completely been executed? It is fully executed as of now. And if yes, so have we received the full LD reversal? We received, I think, 23 CR or something back, but there is some amount left in LD reversal on that order, right?
Yeah. We are still trying to get it with the MOD.
But the order has been completely executed for both shafts and flares?
Shaft is completed, flares little portion is left.
Still it is left. Okay, and by when will that be completed?
This financial year.
First quarter itself, we are expecting to complete that.
Okay, and then only the LD reversal will process. Okay, sir. Okay, sir. That's all from me. Thank you and all the best.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of S.C. Gupta, an individual investor. Please go ahead.
Good morning.
Yeah, good morning.
Firstly, I have a couple of questions. One is with respect to the order book. What is the breakup between export and domestic?
Exports is about 54% and domestic is about 46%.
Okay. And in case of exports, out of this 54%, for which how much quantity we have export license available?
All these things are in process now.
They have completed. It will take.
You can take it like this. From the date of receiving the order, the export license is anything between 3 months to 6 months.
No, now many of these orders are pending for more than 1 year. So I just would like to know that on these orders, because out of 1,600, around 800 is export order. And recently we got only 300 something and maybe another order of 100 or so. So balance 400 are more than 1 year old. So we have not got export licenses for that?
No, those are all, we already have the export licenses. Most of them which are in the process of completion of execution, they are the development orders received where the product is developed to the specifications of the customer.
Okay.
And in those cases, there is milestones we have to achieve in the development and we go by that process. And as per the milestone completion, we keep on raising our invoice against it.
So, in simple terms, if I have understood correctly, out of the about 800 crore of export orders, we are already in development stage for 400 crore, about 400 crore, not to be precise, and another 400 crore we are awaiting the export licenses.
Yes.
Right. My second question is with respect to domestic orders. These domestic orders are also almost 700 to 800 crore. What is the pendency timeline? Like how many of these are pending for more than 2 years or 1 year?
See the orders from BDL and the DRDO.
Yeah.
As I mentioned many times earlier, there we are dependent on the free issue materials given by these agencies.
Okay.
So these orders, unless we get the free issue, the FIMs, we cannot execute them on our own. So rightly present delivery status is we are able to do from around different type of motors, around 40 numbers for these domestic customers. So
We have many orders pending because we do not have a free issue material available with us.
Yeah. As and when the free issue material comes, then we immediately complete the product and deliver back. So right now, like I said, around 50 numbers per month are being produced between different types of products. That is LR SAM, MR SAM, Astra, all this.
Okay. And what is the average cost of this revenue from this one unit?
We have that.
And those numbers.
Right now,
a lot of products are there.
I think we can share with you some information later on.
Okay, no issues. One more thing. What is the amount of LD which is pending, which can be reversed? You just now indicated that your final flares will be supplied in the month of, in this quarter itself. Then what is the amount of LD which you will be putting a claim for reversal?
We are trying with the government. We have to see it is around 30 crores kind of.
So 30 crore is the amount which we will claim, and depending upon the final approval. We may get some.
That is the claim. We always claim for the largest amount.
Yeah, I agree with you. You will claim for the best, and whatever you will get it, that is what we get.
Yeah.
And one more thing, what is the amount of orders which could not be dispatched at the end of March?
That means you are saying that we have missed the delivery period?
Yeah.
You mean by that?
Either we have missed the delivery period or otherwise the inspection could not be done, so we could not be these orders could not be dispatched.
We have the figure.
The shops and players have 30.
Yeah, these are all the running orders, so they have no 31st March deadline other than our own balance accounting systems. So.
Okay, because in last call you indicated that some of our orders depend upon the inspection by the defense people, and these are dispatched only after the defense inspection.
See, very recently we completed one PDI. PDI means pre-dispatch inspection.
Yeah, this is what I'm saying. That anything was pending on 31st March for pre-dispatch inspection. It means material was ready.
These were ready, and then three different lines of around 30 crores worth were offered for inspection, and in the month of April.
This has been dispatched.
Yeah, it was completed and we have dispatched. In June again we are offering further quantity for inspection. We hope that the first quarter we will be completing those also.
Okay. And one more thing, are we considering any kind of strategic alignment with any other company to expand our business? Like one we have with NIBE, Global Ammunition.
That is, yes, we have one joint venture company which is like to do it. But we have strategic memorandums of understanding signed with multiple companies which are going to help us in our, because we are one of the areas is that presently which is very much in the vogue is that drones and loitering munitions.
Yeah.
So we have understanding and MOU signed with multiple companies for provision of payloads to these companies. They are producers of drones, but the payload has to be supplied by us. We have multiple kind of understandings and MOUs.
Okay. And my final question is with respect to the current year target of revenue of about 600 to 700 crore. How much we expect will be the export contribution out of this?
I think around 300. Yeah. 200 will be in the current year, that is FY 27 we are expecting for export. But mind you, these are all presently majority of these are development orders we are executing.
Okay.
Once we complete, then they get converted into production orders which are a little larger than these figures.
Okay. So we are normally, this year, if I have understood correctly, it is around 200 crore of export and 500 crore of domestic revenue.
Yes.
So that is what we are. Will it be evenly distributed across the quarters, or there will be variation across the quarters?
There will be variation. It's always there. One of the reasons, like I told you, inspections and dispatches.
Okay.
And then we are dependent on some imports for some of the raw materials. where they
Okay.
are getting delayed, that also is affecting the deliveries.
So in normal course, that is our target as on date.
Yeah, exactly.
Okay. Thank you. If I have any other, I will come back again in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Apar Bansal from Alpha Ventures. Please go ahead.
Good morning. Am I audible?
Yeah.
So firstly, many congratulations so to achieve this kind of milestone. So
Thank you.
I have only one question. Why is there execution risk in this business?
Pardon?
Because we are delaying the orders and we are not able to complete the orders at the specific time. So how do you assess this execution risk?
Accident.
Yeah. If you remember, we had accidents in the last year in two of our plants. One of them is the flares manufacturing facility, and you know that flares is one of the important products we produce for Indian Air Force, and we are the only source, and then we are holding multiple orders on that. Because of these things, the deliveries got affected. We had to import some of the components which we produce ourselves, and the imports got affected because of geopolitical conditions, ship movement. And now, like I mentioned, now we have completed the reconstruction of the plant for flares and all those. We are producing ourselves. We are not dependent on the imports now. And we hope that we'll be executing it much faster than earlier.
Okay. So the target that you have just mentioned for FY27, it's going to be somehow achievable, or it will face this execution risk again?
On that, we think it is achievable only.
Okay. Thank you so much, sir. I wish you the best.
Thank you.
Thank you. The next question is from the line of Varun Jain from Dolat Capital. Please go ahead.
Hi, sir. So just wanted to understand, for FY27, what will be the capex total?
Last time also we gave the number. I think the same thing remains.
Okay, so it is like 32 CR, right? 60 minus 28, which was done. That is the amount?
Yeah.
And sir, when can we get clarity on this export license for this 350 CR order? When is that license expected to come?
Maybe
it's a running process always, this following up with the export license. Maybe I think in 3 months' time we should be able to get this.
Okay. And so the ISRO revenue which we get, how much was that in FY26? And what is the contract life remaining for that revenue?
Could you please repeat?
I'll tell you. That is around 18 crores per annum. The contract life is about another 2.5 years.
Another 2.5 years. So it will run up to FY29 mid, H2 FY29, you're saying, right?
Right.
And this 18 CR run rate will remain constant, or it will go down?
Constant. More or less constant.
Constant. Okay, sir. And so just last question. So the 600 to 700 CR revenue guidance, so sir, seeing as to this year was like on the revenue terms, we missed the guidance a lot. Like, so is this like too aggressive? It seems a little too aggressive.
No, if you look at our order book, it will not look aggressive. We are talking about an order book of 1,500 plus crores.
But sir, the execution has a lot of challenges, right? So that way.
Okay. Yeah, we'll try. That's why you said that we'll try our best to achieve that. And some of the problems which we faced in the last year because of the wars, multiple wars and conflicts, those are now, we are thinking that we have overcome that. Like I told you, like we found alternate raw materials and sources and all those. We are able to do better.
The margins will revert to like 20% or 15% levels in FY27?
Yeah. 15 to 20% is our...
Okay. Okay, sir. Okay. That's all from me. Thank you and all the best.
Thank you.
Thank you. Participants who wish to ask questions may press star and one at this time. The next question is from the line of Deepak Karwa and an individual investor. Please go ahead.
Hello.
Yeah.
Good morning, sir. Congratulations on recent quarter. So, sir, I have two questions. First one is regarding, is there any update on ongoing discussion and negotiation with Andhra Pradesh government for manufacturing unit of defense? Likely, what is the milestone we have achieved so far, and what will be the next step and the expected timeline from here?
The land parcel is identified and selected by us from the 6 different land parcels they showed. We have selected and then identified that. Now the pricing is the issue. We are asking for a discounted price. They have asked for a different amount. We already approached the Andhra Pradesh government, the senior officials and at secretary level. The discussion is going on to revise the price of the land.
Okay. So, sir, what will be the expected timeline from here?
So this is the moment this land parcel price is finalized and we get a demand note, then the activity will start acquiring the land, and then because we have a lot of orders in hand which we can execute through that facility. So we expect that within 1 to 1.5 years we can commission it.
Okay, sir. Understood. And so in recent quarter, our other income has been increased from 13 crore Q4 FY26 and 42 crores for FY26. Could you elaborate the key component contributing to this increase? Are these recurring or largely one-off in nature?
It is not recurring, it is one-off nature. So in previous quarters also we had it, but this is only one-off. This is the last one.
Okay. So what is the reason for the increase in this quarter?
Pardon? Please go ahead.
What is the reason behind increase in this quarter?
No, previous quarter also we got
Increase in
other income.
Like the payments which got deferred and deliveries got deferred, now they are cleared and then we received.
The discounts last time we negotiated with them, so they gave it in 2 parts.
Okay. What are the key components, if you can tell us?
In previous quarters also we gave the details. Same thing. Material procurement, so we took discount from the supplier.
Sorry, sir, you are not a bit audible.
No, the delays which are because of non-delivery of the items, those are taken up with our vendors, and then we got a discount against it. Cost of the expenses due to these things, we got a discount on the price.
Okay. Understood, sir. Okay.
Yeah.
Thank you so much and all the best for next quarter.
Yeah.
Thank you.
Thank you. The next question is from the line of Dipen Vakil from Phillip Capital. Please go ahead.
Thank you for the follow-up opportunity, sir. So first I want to understand, sir, your current order book. So when we look at your current order book, what would be a blended execution timeline that you can foresee for completely executing the current order book? And what is your order pipeline per se when we look at say in FY27 or maybe FY28 that you're expecting?
Now we have about 1,569 crores. So this will take 2 to 3 years to complete it.
And parallelly, other orders are also there which we are negotiating, which can materialize. Like earlier also you have mentioned, the order book will continue to remain at that level because
around 1,000 plus kind of thing.
If you know that the new facilities are being added, at Katepalli and other places. So these are going to contribute further for that.
Got it, sir. So, okay. So, second question is, so now when we look at explosive as an industry, there's a lot of consolidation which has happened in some companies. At the same time, some more companies have come in, even in Andhra Pradesh side of it. So, how are you looking at the space evolving, and what kind of changes are you expecting, and what will be your differentiating impact for premier explosives so that the demand and scenario for premier explosive remains unimpacted?
See, others are trying to enter. It always takes at least in a period of 5 years minimum for establishing an explosive manufacturing unit or storage and all those. So that advantage we always have. And another thing is, like we mentioned earlier, apart from we are well entrenched in the rocket motor business and we are exporting. We have multiple orders on this area and we are expanding further. In addition to that, our focus areas are landmines and payloads for drones and loitering munitions and medium caliber ammunition, where the demand has grown because of the recent conflicts. So we hope that we are much ahead of others in these areas.
Got it, sir. So, and what is your outlook on shafts and threads? Because largely Indian armed forces were importing it. You are among the first ones to manufacture it domestically. So, how is the opportunity shaping up for shafts and threads, considering that now you also backward integrated a lot of those components?
Yeah, it's good.
So, are we expecting any new orders from shafts and threads?
Yeah. It's like I mentioned. Yeah, some of the orders are at negotiation level. Some are already the RFPs we participated and waiting for that. So it's going on.
Got it, sir. Thank you so much for answering my question, sir.
Thank you.
Thank you. The next question is from the line of Sahil Karia from White Pine Investment Management Private Limited. Please go ahead.
Yeah, thank you for the opportunity. So I just wanted to know your views on the Odisha capex plan. Like where are we currently and what are the further timelines?
Actually, like last time I mentioned, the land which was seen and all those, when we went and personally looked at it and all those, we felt it will not be meeting our requirements. So same thing we have informed to the Orissa government, and the government is proposing some other new areas. In fact, to share with you, today I have a video conference with the Orissa government officials for discussing about the other land parcels. So we are still hopeful that we will find some land for our future expansions.
Sir, any kind of timeline by when we will be able to, start the operations at Odisha? Because I guess the products that we would be manufacturing are one of the key drivers for the future revenues. So any timeline for that?
Yeah, like we have mentioned earlier, we plan to do it in 3 phases. These 3 phases, first phase, we have already started working in Andhra because that land parcel is closer to us rather than the Orissa. After that, the second and third phases, then we are thinking of Orissa and then which may take around 4 to 5 years.
Okay. Thank you, sir. And the next question is regarding the ISRO service contract. So we see that now, even ISRO is planning a number of launches, increasing the number of launches per year, and the propellant requirements for these launches would increase. So, do we have any plans of renewing our contract with ISRO?
No, the present contract has another 3 years completion time, 2.5 years. So any further thing will RFP or anything will come after that or during the last year of execution of that. Yes, we'll definitely participate.
Okay, and also we also do the service contracting for the Jagdalpur plant. That is, I believe, it is for the Agni missiles propellant. So could you just give us some?
We have not got the last current running order. We lost that in our bidding.
Okay.
So Jagdalpur is no more being serviced by us.
Okay. No, because you have mentioned in the PPT as well that like it is under our O&M services. So like what was the reason of like using the contract?
17 years we have done that.
No, we have done it, and then our costs have gone up, so we can't, based on the cost only, we can submit our price quote. And the new contractors, they quoted low, and then they got the order.
Okay. So are we still supplying this pyrogen igniters or any products that we were supplying earlier for the Agni missile? So are we still?
Yes, we still supply all those. What are made in our plant, we still continue to supply. In fact, as on date, we are still the single source to DRDO.
Okay. Okay. And so this last question on this other missile programs. Currently, we are just supplying the solid propellants like for MRSAM, LRSAM, and Astra. So like, do we have like plans to manufacture the entire rocket motor and not only the propellants?
No, these areas, entire rocket motor, we are not doing. As on date, we have no plan also taking up. But up to hardware, that is the rocket motor casing and then components and all those, yeah, we are doing for other new systems and for export. Opportunity, if we get that opportunity, we'll also participate in these motors also. But electronics, guidance system, and then seekers and all those, we are not into that.
No, sir, my question was regarding the rocket motors only. Like currently you are only supplying the propellant, like the chemical or the chemical material part, right? We are not supplying the entire rocket motor for this current missile programs. So any plans to...
Right. We are not doing, but if given the opportunity, we will take up that, because for export purpose, we are doing the full rocket motor.
Okay. Okay. Just to follow up on that, like, as we see the quantum of the export orders that we receive, it is between 30 crores to like 150 or 300 crores. So like, we are currently only doing developmental projects only. So do we have any expectations or timelines by when can we receive production orders for the already developed products exported?
See, we have both in our kitty, that is development orders, and we are also executing the production orders. Like warheads, as on date, we are completely producing warheads for their requirement. And we are also producing other rocket motors which are there and all those. So both kinds are there, production orders as well as development orders.
Okay. And so this last one question, like you have guided revenue, like given a revenue guidance of 600 to 700 crores in FY27. So what could be the like major drivers for this revenue growth? So like we are speaking of about some 50% growth in the revenues from FY26 base revenue. So like what are the products that could drive these revenues?
Execution of the products which got delayed in the last financial year because of the geopolitical conditions. And also, like I mentioned, these are areas we could not meet the requirement, that is landmines and drone and loitering munitions, payloads and ammunition, because of the availability of raw material. Now there is a better visibility of raw materials, and then designer also is accepting the alternate raw materials suggested by us. So we are expecting that these areas are going to contribute.
Okay, and this will be from the existing plants only, right? Like the Odisha capex has now been shifted for 4 to 5 years, and I believe Andhra.
We may go to Andhra for some of them.
Okay, and the new land parcel that we are looking at Andhra, even the timeline for that would be 4 to 5 years, right? The revenue contributing from this plant.
Yeah, we can produce these from our existing facility also, but not to the larger quantities. So depending on the quantities and all those, when we are ready with that, we'll produce from all plants.
Okay, thank you. Thank you so much, sir.
Thank you. The next question is from the line of Jagjit Sandhu, an individual investor. Please go ahead.
Yes, a very good morning, sir, and congratulations on the result. I just have one pointed question, and considering the incidents that took place in the last financial year, where you mentioned that there were two specific incidents, and going forward, obviously looking at the large order book that we have, what is the chances or likelihood of, similar incidents taking place, and what are mitigating actions that are being planned towards that, so that, the revenues which are projected could be met? Thank you, sir.
The Katepalli incident has affected our production capability of large rocket motors, which are made for ISRO and also for strategic systems of DRDO. So these now the equipment already in fabrication, and then the building is under construction, and the time frame what we are looking at is by September month these will come into commissioning stage, and after commissioning we may be in November month onwards we are expecting that we can start producing for this facility. And about other accident in Padakandukur, that was in the flares plant, which we have already completed and then started using it for production. The licenses were, suspended licenses were given, and then we are producing already.
More automation and all this, we are trying to avoid this.
And we have incorporated safety control equipment and automation and remote operations in the new facilities and new plants. Those will definitely support us in overcoming these problems what we faced.
Right. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Manish Khemani from Middleton. Please go ahead.
Yeah. Hello. So you said that you have applied to DRDO for this alternative raw material. Have you got the approval for it? And if not, are the chances of...
First they were refusing, but now they have accepted it, and then they agreed to test it, and testing is going on with the new raw materials.
And what part of the order book is affected by this material?
This is landmines. For example, landmines require high explosive, which is made by only MIL. And MIL was not able to meet our requirement. So now we suggested what we produce in-house and as alternate material, and they have accepted, and they are testing it to give a clearance.
Okay, sir. Thank you. That's all. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. T.V. Chaudhary for closing comments.
Yeah. Thank you very much. Thanks a lot for supporting us in difficult times of rebuilding our collapsed equipment and then facilities. And then I'm happy to inform you that we are already into regular production, in-house production of flares. And as I mentioned, by October, November, other things also we'll be doing. And my team is fully working on these areas to open up, that is landmines and payloads for drones and loitering munitions and medium caliber ammunition. And I think by next financial year, we'll be meeting the requirements of domestic market successfully. Thank you. Thank you.
Thank you.
Thank you. On behalf of Premier Explosives Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.